what are your top KPIs when you're looking at an opportunity? Obviously, there's a lot of numbers that go into, and not just numbers, because there's management, there's location, there's all kinds of things. But what are some of the top KPIs that you look for to give you that quick understanding that, hey, this is a deal worth looking into more? Because you could, I mean, a full underwriting of an apartment complex, which is a business, it takes some time. But before you start investing that time, what are some of the top things that you're looking at that, hey, I think this is worth looking into. Let's dive in deeper.
Cody,
Yeah,
before you answer that, I was gonna, because you're the underwriter, Cody's our acquisitions guy, but I want to real quick just highlight before Cody gets into the details, because I know he will, is I think for investors, especially because I focus on investor relations and marketing and things of that nature. And I think Cody, correct me if I'm wrong, we've gotten better about this, even just looking at, oh, a deal hits your inbox. The story and the location is so important. Forget the dollars. It could be the best deal on paper, but if it's a D class asset in a D class neighborhood, it doesn't matter what type of returns it pushes out, right? The story is so important. The location is so important because at the end of the day, we're raising capital and we're partnering with other investors who want the returns of, the capital returns and the equity appreciation, the tax benefits. Nobody wants to be own this junk building in some town that they've never heard of. And then you got to think about your exit. Who's buying that, right? You might find this amazing deal 4 hours away from Houston in some town that nobody's ever heard of that's got 500 people
You
in
can't
it.
change that. I mean,
But you
you can
can't
change
change
the
that,
way the
right?
property looks and the way it's managed, but
Exactly. So I think
you can't
we've
change
gotten better at, before we start looking at the details of KPIs and cap rates and all that stuff, it's like, okay, where's this at and what's the story? If it's good, if we like the location and we like the story of the property, we feel like this is something we can buy into ourselves and then therefore confidently pass that on to our investors when we're raising capital, then we proceed. I'll let Cody take it from here.
Yeah, no, that's a great intro to that conversation, Brian. I mean, you're exactly right. It comes down to location and story for sure. So first off, we look at the market. Is it a market that is our target market? Do we want to be invested in? And then we boil down to the micro market. Is this in a particular sub market within that general area that we want to be invested in? So if we're looking at Houston, San Antonio, we have very defined micro markets that we particularly focus our interest in, and anything outside of that, it just goes immediately to the junk box. We don't even take a look at it, right? And then, like you said, we look at the deal. Does it fit our investing thesis? Right now, we're very, very much leaning towards the core plus assets right now. So anything that's a newer building, stabilized occupancy, we don't want the deep value add reposition type products right now, just because we feel like on a risk adjusted basis, it doesn't make most sense right now. So, but then looking at the property level, then you got to look at, things like, hey, what's the in place cash flow, net operating income? Can that support good debt? If I'm going to go buy a building on a 5-year hold, can I secure the debt that matches that 5-year business plan? So that's the first thing I look at, is what's the in place cash flow and net operating income, and can it support the new debt? The second thing is I look at what's the overall gross potential income, where it is now, and then what's the delta as far as the market comps. Can we increase that gross potential income through either a value add strategy or capturing other income like fees and whatever other items that may be missing? And then looking at the expenses, are there anything on the expense side that we can reduce or maybe cut that is running a little heavy, and just trying to get that story. So, and kind of keep this general without going too much in the weeds here. But so looking at, again, gross potential income over the expenses, and then really where does that fit into where the market performance is right now? So, but really it just comes down, most importantly, is the in-place cash flow and the debt.
Mm-hmm. You touched on two terms that let's just highlight for those who don't know what they are. You said core and core plus. Just brief explanation on what those are.
Yeah. Sorry. So that's your A and B class product, right? So that's your buildings that are typically newer. Let's call it 1990s to present date building. They typically have better amenities, that are more modern amenities, modern finishes in and throughout the community that appeal to today's current standard of living, and typically are, better positioned most of the time in better ideal micro markets or locations within a certain sub market. So you're more of your value add or opportunistic deals are, again, those older buildings, let's call it 60s, 70s, 80s vintage, a lot of deferred maintenance, needs a lot of heavy lifting, so to speak, to really reposition it back up to market standards. So
yeah. I call those well-located opportunistic deals, the huge value adds.